Hey guys, Michelle Massio here. Thanks for checking in. Thanks for checking out my video. I just did a whole video before and it was so amazing. And I just realized at the end I did not share my screen. So I'm going to re-record it right now. And I'm going to make sure I share my screen right now. Okay, so check this out. This video is going to show you how you can have a really small account, investment account, and still make like really good trades and overall make a lot of money for yourself on an annualized basis. So I just did a trade maybe like half an hour ago or something like that. And I want to share it with you guys. So check it out. I think now you can see my screen. It's so funny. Before I wasn't even sharing my screen. So this is going to be on Riot. Now, Riot, first of all, quick disclaimer, right? I'm here to educate you. I'm here to show you how amazing options are, trading options, and how you can make a lot of money on a regular basis and with very minimal risk, lower risk than probably what you're taking now and you don't even realize it. But I do want you to understand that obviously trading in the stock market does involve risk. You could lose some or all of your money, right? But what I try to do is I try to look at statistics and likelihoods and, is this a good trade? Is it not a good trade? So I'm here to hopefully educate you and help you understand that you can learn how to do this and you can make a lot of money for yourself in the process. So I'm going to set my timer. I'm going to try to keep these videos to 10 minutes. Let me show you Riot real quick. Riot is like a blockchain company. I'm not in love with the company. It's funny. Warren Buffett says, and this is a pretty good general rule. Don't trade things that you wouldn't want to, let's say, own for the next 50 years, right? So it's a pretty good general rule. I would definitely not want to own Riot for the next 50 years, but I do like Riot for a couple reasons. It's got a lot of volatility and I could just make short-term pieces of money. And the risk is super small. So I'm going to walk through that with you. So they're kind of a blockchain company. As you can see, this is a 52-week chart, and it's been kind of like flat, and then obviously it went up. I mean, because it's blockchain, it's tied to Bitcoin. Bitcoin goes up. This company typically goes up. That's kind of like how these things work, right? So I'm going to talk about a put first. I have a couple of things on Riot, but this video specifically is going to be about a put. So a put, you might recall, is when you sell a put, you're becoming like the insurance company. What you're doing is you're taking in a premium, you're taking in cash money into your account, and then you're promising to buy a stock at a certain price if it drops to that price. So as an example, Riot is $16.50 per share right now, right? Obviously it's changing. This is like moment by moment. I sold a $12 put. What that means is if Riot drops from $16.50 where it's at now to $12 between now and the expiration date, which in this case is January 8th, that's this Friday, I'm going to buy 100 shares of Riot at $12. So I'm committing to buy someone else's stock if it drops in value, right? For that commitment, I'm paid a premium. I was paid $14, right? So $14, and I sold 10 of them. I'm going to talk about that in a moment, but we're just going to walk through like one quantity at a time just so you get the concept, right? I have a really cool spreadsheet that I use that helps keep track of rate of return and risk and things like that. I share all these spreadsheets with the people in my group. So what I've been doing lately is I've been teaching people how to do this, right? Because I think it's amazing. And I think I think first of all, let me say this. I think nobody needs to hire a financial advisor generally. Nobody's going to treat your money better than you do. Let me say that again. Nobody's ever going to treat your money better than you. Believe that. And, people think that like it might be confusing and blah, 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 and it's not worth it. But let me tell you something. I'm going to show you the rate of return in this particular trade, and I'm going to explain a few things. And I have some other videos that have hopefully you've watched and you can see some other things. Options are not hard. They sound challenging at the beginning because you're just not familiar with that. It's kind of like, I don't know, like you learn how, I always think of this, learning how to drive stick shift, right? So like, standard shift. So I don't even remember how old I think I was like 21 maybe when I got a driver's license when I was 16, but I drove automatic. And then I think when I was 21, I wanted to buy this kind of like hot sports car. I was making some decent cash especially for a 21-year-old. And I wanted a stick shift car and I didn't know how to drive stick shift. So when I started driving, I was like, oh my gosh, okay. So I have to use my right hand and then I have to use my left foot in the clutch. And then I have to also hit the brake. And if I'm on a hill, like, I don't know, how does that work? Like, I don't want to roll backward and hit the car behind me, like all these different things. And it sounded so confusing. But guess what? Like you do it a few times and you get the hang of it. I haven't driven stick in a long time now. I drive, obviously automatic cars. Stick is kind of like, yesterday. But I'm sure if I drove a stick today, I could just drive it like and pick up, you know, like right where I left off. Kind of like riding a bike, right? Everybody says, you know, you ride a bike as a kid and it's hard at the beginning. Then you learn how to do it and you could not ride a bike for 10 years and pick up a bike and you could ride a bike and not fall on the ground. Options are the same. Let me tell you, let me repeat that. Options are the same. You put a little bit of time and effort in at the beginning. So probably I would say, people ask me how long does it take to learn? Maybe 10 hours, 12 hours. Maybe that sounds like a lot of time, but oh my gosh, let me ask you a question. If you can take 10 hours of your life right now and learn how to do this, and afterward, as a consequence, be able to, let's say, make yourself 20, 30, 50, 100, 500% on an annualized basis with lower risk, for yourself year over year over year, and do that with, let's say, 20 minutes a day, not like quit your day job or something, just do it on the side. Would that be worth it? Heck yeah, it would. So anyway, this isn't a commercial, but I just wanted to kind of throw that out there. But let's go back to Riot, okay? All right, so Riot's at 16.58, 59. It's always changing, right? I sold this $12 put. My margin to make the trade was $79, super low. So let me talk about margin for a moment. Let me see where we're at with time. Margin, I have some other videos that talk about margin as well, but basically margin is like the good faith money that you have to have in your account to make the trade, right? So there's a couple different kinds of margin. I have what's called portfolio margin. I use Interactive Brokers. That's a custodian I use. This isn't a plug for them, by the way. I don't get paid. I'm not affiliate with them. I'm just kind of sharing, you know, what I do, and hopefully it's helpful for you. But basically, a portfolio margin is good for me because the custodian, what they do is they kind of like look at your trades on a risk basis and say, okay, well, how much money should this person have in their account in order to make this trade? So typically the margin is a little bit lower than like what's called a regulation T margin or something like that, or cash secured, making cash secured put. But basically, let's go to worst case scenario. I always think of worst case scenario because you always want to think of, okay, well, what if this company went bankrupt? Like how much money would I lose? Because really you want to understand that to see if it's a good trade or not a good trade, and then you want to counter like balance that to how much money you're going to make, right? So this is a $12 put for Riot. That means if the price goes from 16.50 where it's at to 12 bucks, I'm going to buy it between now and Friday. Now, from a statistical likelihood, there's only, I look at delta for that. Delta is like, and don't worry about like, this is not confusing. The custodian will give you all these figures, but delta is like the cheat sheet way of understanding what is the statistical likelihood that the price of Riot is going to go from where it's at now to the strike price, 12 bucks, between now and the expiration date of Friday, this Friday, January 8th, right? So it's like, in this case, it's a 6% likelihood. Now this number is always going to change. It was 7% a moment ago, but now it's 6%. So there's a 6% statistical likelihood Riot is going to go from 16.58 to 12 bucks between now and Friday. So it's probably not going to happen, right? But if it did, I would buy it at 12 bucks. Worst case scenario, if you sell one contract, worst case scenario, if you have to buy it, $12 per share times 100 shares, I'm paying out 1,200 bucks. Worst case scenario, if you wrote one contract and let's say you had to buy the stock and then the stock went bankrupt, the company went bankrupt and you lost all your money, you would lose $1,200. So you have to understand, okay, well, is this a good risk for me to take? I think it's a great risk. I don't think they're going to go bankrupt. First of all, two things have to happen. It's got to go from 16.50 to 12 for me to buy it between now and Friday first. And then after I buy those 100 shares, if it went bankrupt, I would lose all my money. I mean, it could happen. I could get hit by a freaking meteor right now, like as I'm typing on my laptop. It's possible, but the likelihood is very, very low. So I'm okay with that. The cost, the price that I took in for this option was $14. So what does that mean? That means I take in, and I know that doesn't sound like a lot of money, but let me show you. Don't look at things in dollar values, look at things in percent values. Dollars, who cares? It's percent that's important, right? So I'm paid 14 bucks. Let me check the time. I got 2 minutes left. I'm paid $14 in order to commit to buy 100 shares of Riot at 12 bucks. If it drops from where it's trading now, which is 16.50 down to 12 bucks between now and Friday, I'm paid 14 bucks. Okay, let's crunch these numbers. What does that mean? That means assuming it does not drop down to 12 bucks, which there's only a 6 or 7% likelihood it's going to do that. So assuming it doesn't do that, and I keep the 14 bucks and I don't buy the shares, on an annualized basis, because it's only a 4-day trade, I'm making 1,600% on the money that I'm putting up. So I'm putting up $79 to make the trade. I'm taking in $14. I'm only holding it for 4 days after the expiration date. There's no more risk. Assuming it doesn't fall down to that price, I'm making 1,600%. People, I mean, not all your trades are going to be like that, but and the reason why this one's pretty high is because the implied volatility is super high on Riot. So Riot's got like tons and tons of volatilities like this. Like, you know, it's like, look at the chart, it's like parabolic right now. But I mean, what you have to determine and what you have to think of for yourself, do I want to risk 1,200 bucks? And you want to look at it in percent. I sold 10 contracts, right? So I did 10 of these. So worst case scenario, 1,200 times 100. 1,200 times 10, because I did 10 contracts. Worst case scenario, I'm going to lose 12,000 bucks. Like if I buy the stock and then they go bankrupt, which is very, very, very unlikely. But that's the worst case scenario ever, right? Now this account is 988K, right? So from a percentage basis, 12K minus 988K, it's a little more than 1%, 1.2%. So what you have to look at is you want to structure your trades and your positions on, you know, I could be totally wrong on lots of these trades multiple times and not blow the account up. Oh, that's my 10 minutes. I'm gonna keep going because I don't want to cut it off. But if you have a finite risk on each particular position, okay, I'm going to risk 0.5% on this position. Okay, I'm going to risk 1% on this position. Do that, because then worst case scenario, you're only going to risk like this much. Let me tell you something, people. It's so easy to make money in options, like so super duper easy. It's harder to manage your risk and not lose money. So that is the key. That is like the secret freaking sauce. Like, pay attention to your risk. Pay attention to what your maximum exposure is. Don't look at, oh my gosh, I'm only making 14 bucks. Yeah, I'm making 14 bucks. I did 10 of them, so I made 140 bucks for 4 days. So you do that over and over and over again. And again, you make a return like this, 1,600%. So options are like, everybody should be trading options. I'm going to throw this in at the end, and then I'm going to wrap up this video, because really, and check this out. SPY is the S&P 500. That's an ETF. Is down like 1.5% today. My account is down a tiny bit, but 0.13%. And then the other thing is, I pay attention to, this is bomb, people. I pay attention to cash is king. Income is what's important when we talk about options. How much are you making selling options? So all my options, these are all my trades I did today as an example. So these are the sell options for today. I'm going to just sort them all with expiration dates of this Friday. I don't know what's going to happen in the market tomorrow, right? I don't. And I don't pretend to know. I've worked with people in the past that are like, oh my gosh, this is going to happen, that's going to happen. I'm like, bro, I mean, what makes you maybe you think that's going to happen, but nobody's got the crystal ball. The smartest minds in this industry in the world do not know what's going to happen tomorrow. I guarantee you. Every year I go to a financial conference sponsored by Tony Robbins, and he has like the smartest investors on the planet. People like Ray Dalio is a big hedge fund manager. People like that, they don't know what's going to happen in the stock market tomorrow. Nobody's got that crystal ball. What you have to do is you have to like use the most educated decisions. You have to use like statistical likelihoods. And when I say statistical likelihoods, don't think you have to be some math genius. You don't. I just mean like, you know, basic statistics. You know, it's a 5% likelihood of this, 5% likelihood of this. Just some basic math. You could learn how to do this legit in like 10 hours. You could learn how to do exactly what I'm doing in like 10 hours. And then you could not have to quit your day job or anything like that, and spend like 20, 30 minutes a day and make yourself 50, 60, 70, 100+% on an annualized basis with lower risk than probably what you have now. And you just don't realize it. I'm telling you, this is not, I mean, it sounds kind of hard at the beginning, but it's not, once you put that time and effort in. And let me ask you something. Do you think it would be worth it for you to spend 10 or 12 hours today, let's say, not today in one day, but like over the next 2 weeks of your lifetime? Do you think it would be worth it to spend 10 hours learning things like this, and then have that knowledge and be able to, let's say, just spend 30 minutes a day and be able to make yourself 50% annualized on an annual basis, fire a financial advisor who doesn't do shit for you anyway, but whether you realize it or not. And then you have that knowledge and those tools moving forward for the rest of your life. Oh my gosh, this is like a no freaking brainer. So let me go back to like, I keep this, I have this amazing programmer that does some work for me, and he put together this API. Hit me up if you're interested in maybe getting something like this. But basically this kind of keeps track of, I could see what I sold in premium by looking at my trades over here. But you know, it doesn't like total it up for me. So this totals it up and it says, okay, today I took in income today. So this is the big thing about difference between trading options and trading stocks. When you trade options, when you sell options, this cash that you sell, that you premium that you get goes right in your account right then and there. When you trade stocks and you make money, that's unrealized gain. You don't actually realize or recognize that gain or be able to spend that money until you sell the stock. That's a big flaw in stocks. That's a big difference between stocks and options. I'm going to have another video that talks about that, but just know that today I took in 17 grand in premium in this account. So if you're looking at it from a percentage basis, again, look at everything from a percentage basis. 17,000 bucks divided by 988, 000. That's one day. It's like 1.7% in income. So let's say, assuming all these things expire worthless, you know, or whatever the case is. I mean, I'm going to have other videos that kind of elaborate on some of this, but just go with me for now. 1.7%. There's typically 5 trading days in a week, right? And then 52 weeks a year. So times 5 times 52. I mean, you could, you know, 447% basically. Now, I'm not here to say, oh my gosh, you're going to make 447%. But what I am here to say is, if you think there's a likelihood that I could be a smidgen right on some of this, and even if you like mess up a big chunk of it, maybe you don't make 447%, maybe you make, I don't know, like 10% of that, 447 times 10, that's 44%. I mean, how would you feel about making 44% a year? You can do this. So I know I'm kind of elaborating. I'm going off on a tangent. This was supposed to be a quick 10-minute video, but the purpose of this video, and hopefully I conveyed this to you, is how you can have a super small account. Like some people think like I need a lot of money to trade options. You don't. I mean, maybe like I like to trade Tesla, and Tesla is obviously more expensive per share, but you can have a small account and make the returns like I'm talking about. So hopefully this helped. Cheers, and hit me up if you have extra questions, or if you want some extra materials to teach you, or if you want to join or more information about our group. We have like a very cool community of traders, private WhatsApp group, and we share a lot of different things. And then we have like weekly Zoom calls where I screen share things like this actually, but it's more on a regular basis and more kind of like, you know, I just want to help other people, you know, be successful. So basically, anyway, that's my video. And be sure to like the channel if you like the video. And I will see you next time. Happy trading.